and gentlemen, good day and welcome to the Globe Civil Projects Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star key followed by 0. Please note that this conference is being recorded. I now hand the conference over to Ms. Chandni from Equibridge X. Thank you and over to you, ma'am.
Thank you. A very good evening to everyone. Welcome to the Q2 and H1 FY26 earnings call of Globe Civil Projects Limited. From the management team, we have with us Mr. Ved Khurana, Chairman and Whole-Time Director, Mr. Vipul Khurana, Managing Director, Mr. Nipun Khurana, Managing Director, and Mr. Raghav Agarwal, CFO. We will have opening remarks from the management team, post which we will open the floor for Q&A. With that, I would like to hand over the call to the management. Over to you, sir.
Good afternoon, everyone. I am Nipun Khurana, Managing Director. I warmly welcome all participants to Globe Civil Projects Limited earnings conference call. Thank you for taking the time to join us today and for your continued support and trust. The first half of FY26 has been an important period of consistent progress across financial performance, project execution, and order inflow. Our results reflect the strength of our integrated EPC capabilities, disciplined bidding approach, and successful traction across institutional, educational, and sports and public infrastructure segment. During the quarter, we crossed a significant strategic milestone with our consolidated pending order book exceeding 1,000 crores, enabling multi-year revenue visibility. In the last few months alone, we secured major EPC orders aggregating to 450 crores, including 173 crore EPC order from NBCC for Central University Punjab, 222 crores construction of an international cricket stadium in Haryana, 61 crore for Kotak School of Sustainability at IIT Kanpur, and a 13 crore project at NIT Delhi. These project wins reinforce our reputation in technically demanding EPC execution and reflect strong repeated engagement and with marquee government clients. As shared in the last call, most of our project portfolio compromises fully funded central government EPC contracts, ensuring strong cash flow, reliability, and reduced working capital risk. We are currently executing 13 plus ongoing projects covering education, healthcare, sports, public utility, and station redevelopment infrastructure. All the newly awarded projects have already started mobilizing, contributing progressively to the revenue through the second half of FY26. Now I'll hand over to Mr. Raghav, our CFO, for our financial performance.
Thank you, sir. Good afternoon, everyone. Coming to the financial performance, we are pleased to share that we delivered strong growth momentum in Q2 FY26, with consolidated total income rising 40% quarter-on-quarter to 947.81 million. EBITDA improving to 129.67 million, and a net profit increasing 18.32% quarter-on-quarter to 59.75 million. For H1 FY26, the total income stood at 1,624.79 million, EBITDA at 245 million, and a net profit at 110.25 million, translating to a 6.84% margin with an EPS at 2.13. These results demonstrate operational efficiency, project execution speed, and better cost control as we scale post-listing. During the quarter ended September 2025, as shared in the last call, we have received sanctions for enhancement of non-fund based limits along with reduction in rate of interest, reduction in BG commission and other charges. With the increase in size of the projects and increase in number of the projects, Our company is always required to have ample bank guarantee limits, non-fund based limits. We are working continuously to reduce the overall finance cost vis-a-vis increase in overall revenue from operations. That will also add to our margins. We have also started procuring high value material on advance basis or at a lower credit terms in order to reduce direct cost and improving margins. As we move into the second half of financial year 26, Globe Civil Projects remains focused on strengthening execution excellence and accelerating scale through disciplined and margin accretive growth. With a consolidated order book exceeding 1,000 crore and a diversified portfolio across institutional, healthcare, sports, and public infrastructure segments, we are prioritizing timely delivery, optimized project management, and advanced construction technologies, including precast systems and integrated MEP solutions. Our emphasis on fully funded government and PSU-led EPC contract enables predictable cash flows and reduces working capital exposure, positioning us for sustainable performance and operational resilience. Looking ahead, we will continue to leverage our strong credentials, repeat client relationships, and robust qualification profile to selectively pursue high-value contracts in education, social infrastructure, and large-format public utility developments. The expansion of execution capabilities, deeper presence across 11 states, and proactive bidding pipeline supported by increasing infrastructure investment at the national level provides strong visibility for consistent growth. Backed by a healthy execution runway, improving profitability metrics, and strengthened balance sheet post-listing, we remain confident in achieving our stated growth guidance of 20 to 25% and delivering long-term stakeholder value through strategic scalability and disciplined capital allocation. Before we open the floor for questions, I want to thank our employees, partners, clients, and investors for their trust and collaboration. We remain committed to disciplined and sustainable growth, timely execution, and long-term value creation. Thank you. We now welcome your questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Tapan Kumar Doshi with Thoughtful Investor Hub. Please go ahead.
Yeah, thank you very much. Sir, I just wanted to know that how will be the execution for the H2? Means, this 2 quarter was not so great on the execution. I think the second half is always great for you. So how will be the execution? Can you just throw light on the 1,000 crore of order book which you have? Second question will be on the cash flow position. I wanted to know about how will be the cash flow position for the near term and also the interest payment. It's on a higher side. So will it be reduction? So any reduction in coming future? So can you tell me about this? Thank you, sir.
The 1,000 crore cash the pipeline, project pipeline is spread over next 2 years to 2.5 years. So second half is always better for us and everybody in the industry in terms of revenue. So we are hoping to increase our revenue because the new projects have started and the revenue has already been started from the new project. So of course it's going to be better from the second quarter and the fourth will be even better. And Raghav, can you answer about the interest part and the cash flow?
Yeah. Yes, sir. The second half is always better as compared to the previous year also. We have our revenue have increased in the H1, And about cash flows, we have, as mentioned in the prospectus and for the purpose of the IPO, we have deployed the working capital amount in the working capital. So we have ample cash flow available. Our new projects have already started, and in the EPC, generally it takes time to start the new EPC projects. But if you say Batenda project, 173 crore project that we have received in August only, we have already billed around 13 to 14 crore rupees bill in 3 months, 2 months. So we have, since we have a better cash flows available with us, so we are targeting to execute the projects as fast as possible and complete it within the time. That will also increase our margins and reduce the overhead costs.
Okay. Sir, can I just know the percentage terms that H2 will be like 65% of total full year guidance, whatever you give. So whatever next 2 quarters, how it will be? If you can get percentage terms. Execution part I'm talking.
We are targeting the growth of 20-25% on the previous year. So we will see in the next quarter and the fourth quarter as well. So overall growth we're talking about from the last year to this year.
And we have already have ample orders with us. And so to achieve this 20% growth, we don't need any new orders.
Okay. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question comes from the line of Disha from Sapphire Capital. Please go ahead.
Hello.
Oh, yes, ma'am. You're audible. Please go ahead.
Am I audible, sir?
Oh, yes, ma'am, you are.
Yeah. So, sorry, sir, I joined the call a bit late. So, just wanted to know a few things. What's the current order book position?
Around current order book, rather, 1,000 crores or?
Yeah.
Around 1,000 crores. Pending order book.
Pending order as of August, September was 1,000, and after this we have completed some 40-50 crores. So it is around 900 and 950 as on date.
Okay, all right. And what's the pipeline looking like, sir?
Pipeline, one tender we have already bid, and every month we have bid around 2 or 3 tenders. So we are hoping to get at least one work of 200-300 crores, if not more.
200-300 crores in the second half.
Yeah.
New order, fresh new order.
New order.
Yeah. And with the execution and all, what's the closing order book targets we have for this year, sir?
We are targeting around 1,000. That means we will execute another around 250 crores in this 6 months. Considering the 20% growth, 250 to 300 growth we will bill in the next 2 quarters. So we are targeting 20% growth. So another 300 crore will make our order book around 1,000 or 1,100. If we see 1,000, we see at least we should have 2x or 3x order book we should have. So we are targeting a 200-300 crore project within a period of 1 or 2 months, and then another 200-300 by end of March.
Okay. So the project that you're talking about, this 200-300 crores project, what segment, like particularly, we seeing the most order flows from?
No, we are seeing in the segment of educational, institutional, that what we are building. Like yesterday we bid for a admin block in Goa, and one more we had Central University. We already bid for one project of Central University Haryana. So in institutional, educational, this sector only.
So institutional and education will be like a dominant portion of our order book.
Yeah. Yeah, and again we are targeting sports infrastructure as specific, as we hoping that industry, that part of segment will grow in future. We already have two projects of sports infrastructure, one small pavilion of 13 crores and one stadium of 222 crores. In fact, in that stadium project also, there are few upcoming orders for electrical and finishing, which we are targeting. That also was a part of sports infrastructure. So yeah, that's also one of our targets, sports infrastructure.
All right. And so we mentioned 20 to 25 growth guidance in terms of the revenue. So what sort of margins we're expecting for FY26 and FY27?
Our margins are sustainable, and we are, as I have already mentioned in the speech, we are targeting to reduce our finance cost, and with the increase in the revenue, the finance cost will not increase, and we are also now procuring high value materials on advanced basis or lower credit terms. That will also decrease our direct costs. We are targeting, there is a scope to increase the revenue by another 1 or 2%. So we are targeting to maintain that.
So for like as a console base, on a console basis, can we expect like 14 to 15% margins for this year?
As of now, we have a EBITDA around 14%.
Yeah.
That is maintainable, and we are expecting to increase that also. Since now we are also bidding directly. Earlier we were doing projects through joint ventures also. So in JVs, we have to compensate 1 or 2%. So now we have eligibility, we have the credentials, we have a high net worth, we have a strengthened balance sheet. So we can bid directly, and now we are bidding directly. We have not bidded any project in the JV in last 1 year, I think. So that way also it will increase our margins.
All right. That's good to know, sir. That'll be it from my side. Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1. The next question comes from the line of Tapan Kumar Doshi with Thoughtful Investor Hub. Please go ahead.
Sir, one question. As you told that you are working on increasing EBITDA margin. Can you just throw light on something on that, and that next year how much you are targeting, like 14% country you have, means percentage terms what you are targeting in next 2 years?
So we are targeting for bigger projects because the bigger projects has a better margins. Instead of doing 50 crore projects or 60 crore or 100 crore projects, we are targeting 200, 300, 400 crore single projects at a single place. So that will increase our margins. But there is a scope of 1 or 2%. So it is a competitive market, although, but we are targeting to maintain this 14% and to add another 1 or 2% that we can do. And we are targeting our turnover grows faster than 20 to 25, but we wish at least 20% should be the increment in the turnover, at least every year.
Okay, sir. And another question, sir, there are always a problem of regulatory approvals. What you are seeing in the ground level, means are you getting approvals fine, or there is a delay and all that? Because that is always the impact on your execution also, because most of your projects are government projects. So can you tell me about how the macro picture look like and how is the approval coming now?
The approvals are very fast, as we are mostly doing central government projects. And central government project, the focus is on developer. Center is really focused in executing the project. The inauguration is only done by a minister or a prime minister or higher level until you get all the approvals and everything is in line. So the focus is very much. And in fact, most of our projects, we are like Central University Batinda, within 1 month we got all the approvals within 1 month. And in cricket stadium, most of the approvals are still done. So the focus is there to get the approvals. It might get stuck. Some projects get stuck, the technical, some pre-approval is not there or something is not there. But most of our project, the approvals are very fast. Maybe state government, I'm not sure, I'm not aware about the thing, but central government, all the projects, the approvals are very fast.
Okay.
And we are choosy about our projects. So we do pre-work, before bidding. that project is funded or not, the funds are available or not. So that's all we do before taking up any project.
Okay, great to hear that, sir. And sir, are we working on dividend? I mean, payout and all that. Means any guidance on that? You can throw light on that.
So previous year it was pre-IPO, and this year we are in discussion with the board and everything. We'll see if it's required, we'll do it. Yeah. We'll do our best and we'll see whatever is done.
Okay, sir. Thank you very much, sir. That will go fine from my side. Yeah.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question comes from the line of Anand Singh with UNO International. Please go ahead.
Hello, sir. This quarter showed a strong revenue growth. How much of that came from ongoing projects and versus the contribution from the newly secured orders?
Almost 90% is from the ongoing projects. From the four new projects that was awarded in July, August, September. So there is a revenue of around 16-17 crore only. So you can see rest of this is from the older projects only. Initially, it takes time for any EPC project or any project. Initially, it takes time, but since we have got approvals very fast in one of the projects like Bathinda, we have already built in Kanpur also. So that way, it is good that we got some work done approved from there also. Otherwise, it is not that easy to get billing in first 3 months.
Mm-hmm. Okay. Sir, net profit grew ahead of EBITDA. What were the key drivers behind the improvement?
Sir, come again, sir.
Your net profit grew ahead of EBITDA. What were the key drivers behind the improvement?
So net profit for the half year one is 11 crores. That is around 6.80%, which is similar to the previous year. It was 6.30%, and EBITDA is around 14-15%.
Okay, sir. That's all for me.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Tushar, an individual investor. Please go ahead.
Yes, sir. Thank you so much and good afternoon, everyone. Am I audible?
Yeah.
Good afternoon.
Yeah, thank you. So, sir, my first question is that how has working capital dynamics evolved this quarter, especially in terms of receivables and collections?
Hello. Can you answer?
Yeah. So, as I've already said, that we have already deployed most of the working capital from the IPO, and in the sense of receivables, there is a billing every month in every government project. There is somewhere like one of the projects we have is income tax building Bangalore. That is the only project we have which is a budgeted work. There are two kinds of work in the government. One is budgeted and one is funded project. We generally take funded projects because funds are already available, like our Narela project, our KG Mark project. All the projects have funds available with them. All the funds have already received. But one of the projects like Bangalore, it takes time initially. In first H1, you can see there is not a single rupee came from Bangalore, but we had work. The budget came in October only. So that is, these type of projects sometimes takes time. Otherwise, our monthly, there is a monthly billing. There is a cycle like milestone based billing is there in EPC. You generally get lower amount as compared to the project you have executed. But there is a billing every month, and since most of the projects we are doing are central government funded projects and funds are already there. So we are more concerned about the safety and the payment may आने में time लगता है, but there is no risk in that. So in our business in EPC and government projects, there is a high working capital requirement.
Okay. And apart from this execution across multiple states, are mobilization advances and retention money creating temporary cash flow pressure?
Yes. Retention money. Earlier in CPWD we were doing. They were having a 2.5% retention money, but now most of the projects like we are doing is NBCC and all. So they have a 5% retention money, and there are one or two projects where we cannot take the retention money back on BG also. So this way, in these projects there is an amount always held up with them. So that is also a big reason for working capital hold. But since we are bidding tender, so all these things are considered before bidding. We calculate the cost of this money also. So we bid accordingly.
Okay. And industry growth outlook remains strong. So where do you see Globe Civil outperforming the sector?
Pardon, come again, please. Hello?
Yes, sir.
Yeah, please say that again. Ask again.
Yeah, sir. That the growth of industry outlook remains strong. So where do you see Globe Civil outperforming the sector?
Outperforming in the tender.
Outperforming the sector.
Sector.
Yeah.
No, we see ourselves outperforming in the sector because it's a competitive sector, but we are fully committed and fully involved in each and every project, and we only take a project when we see a viability in profit and with the viability in the project. So that's how we can choose only those projects which we think are profitable and which we can complete the project in time and in all good circumstances. So yeah, that's how we do it, and that's how we perform better. So the sector is very positive, and we are very optimistic to the sector. The construction is not going to stop, and more and more infrastructure. Government is already putting money for the infrastructure because still there is a lot of need of infrastructure in our country.
This quarter showed a strong revenue growth. So how much of that came from ramp up in ongoing projects versus the contributions from newly secured orders?
Maximum were from the ongoing only, because we only received the order recently in last 3-4 months. So 90% from the ongoing and only, but yeah, between 4 out of 4, 3 we have already billed. So the billing is going on and the projects are running. So we hope in next quarter also we'll get a good revenue.
That is why we are also bidding for the new projects also. We know that the project takes at least 3 to 6 months. So whatever the new project we will get in this quarter 3 or quarter 4, that will give revenue in 2026-27 only. So it is a continuous process. Every year you complete the old project and the new project takes time.
Okay. And what are the opportunities that you see in newer states you are expanding into?
Opportunity, we see a lot of opportunity in sports infrastructure, which we have already expanded into, which we were not doing in last year. We were very less segment. But this year and next year, we are planning to expand in this sector so that we have pre-qualification and we can bid for higher sports infrastructure projects. Because only few companies are doing sports infrastructure of our level. I mean, Tata and they are already doing it, but L&T and Tata are doing it, but small companies, and we are planning to do projects in sports infrastructure, so have a unique eligibility and we can get good projects in this sector.
We have clients. We have repeated orders from our clients. We try our best to get new projects at the same location. Like Narela, we have got a third project now. Earlier, we have got a 300 crore project. Within the same premises, we have got 50 crore projects. And within the same premises, there was a very small 14 crore project, which we have never assumed to bid. But since it is within the same premises, so we have that reputation that we get same repeated clients, and we are shortly TCL NIT campus is now coming with another 500 crore projects, hopefully in next 6 months or 8 months. So it would be a best opportunity for us because we know the place. We are working there for 3 years. So we have a good opportunity to get that project also. So that is the way. If you can get same projects in same location, that will also increase the margins.
Okay, and the newer states such as?
Pardon?
I'm asking that newer states such as means one or two examples of which states? I mean.
You are not audible, sir.
Am I audible? Hello?
Yes.
Hello? Yeah, I was asking that which states to mention the newer states. I'm asking the names of those. Any few to name?
States?
Yeah.
We are. Our presence is more in the NCR, Delhi, North India. We have the most presence is in the North India. We have most of the projects in Delhi, NCR, and but we are open to bid anywhere. We have one project in Bangalore also. We have done a project in
just now we had bid in Goa, a new state. So we are open to it. Depends. We are just looking for a good opportunity for a good project rather than a state. So we keep on adding the state wherever we get a good opportunity.
Okay, so
but we have added this year.
Okay. And how are your in-house engineering, MEP and HVAC capabilities helping you win more technically demanding and higher margin projects?
We have a in-house HVAC and capability of electrical, and we have a very strong engineering team. We have people working for us with last 20 years, which have grown with us, learned with us, and stayed with us. So we have very high retention of employees. Once they join us, they don't leave us. We train them and we keep them with us. So because as the company grows, they grow with us. So that's always been a policy of employee that makes the company.
Even the contractors also. We have contractors
last 20 years. Yeah, same contractor. A generation of contractor, second generation came and he's also doing business and they are still working with us.
Okay. And last one, and that is, what is the strategic thought behind forming new joint ventures, and where do you see that heading in future?
Behind new joint venture is only formed for the eligibility criteria. If you don't meet the eligibility criteria and if you think that we can get a good project and good prices by forming a joint venture, so we form a joint venture and sometimes we execute ourselves and sometimes we divide our work depending on the nature of the project and terms and conditions between the joint venture. So that's only because of the eligibility criteria, which we are slowly we have decided to do it ourselves because we have already have a good eligibility criteria now.
Okay, and last one was that where do you see project? Yeah. Okay. Yeah, go ahead, sorry.
Yeah, please. Thank you. That's it.
Yeah. Last question was that so where do you see all these heading, right? Joint ventures.
Where do we see heading?
Heading.
No, joint venture is specifically made for a single project only. We don't take a second project in same joint ventures. We don't take.
It is special purpose vehicle for the single project only.
We have an option, we can continue the venture, but till now we haven't, it's not been our history, and hopefully that's not our plan to same. But if you never know, if we get a good opportunity and same joint venture, we get another project, we might do it also. But right now, we haven't done any second project in same joint venture.
Okay, sir. Okay. Thank you so much. That's it from my side, sir. Thank you so much for all the information. Thank you.
Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1. The next question comes from the line of Neelam with HNI. Please go ahead.
Good evening, sir.
Good evening, ma'am.
So my first question is, as you scale across new geographies, what cultural and operational practices from your legacy markets are you internationally preserving, and what are you consequently changing?
Can you say that again? I could not hear you properly.
As you scale across new geographies, what cultural or operational practices from your legacy markets are you intentionally preserving, and what are you consequently changing?
If you in the geography, if you change the state, we do adopt like the best thing from which we do get the local suppliers there. And sometimes, if you find a difficulty to find a local suppliers, we sometimes send our suppliers to set up a project there or procure a material for us. If we think that it's local mafia or some local difficulty we are getting in procuring the material. But yeah, and when the labor comes, only 4 or 5 states around the country which contribute to the 90% of the labor. So our labor contractors, specifically like Bihar, UP, Bengal, UP, and they already contribute to the labor. So we bring labor from there. Materials, mostly steel and cement, are from the plant of only the basic raw material, local raw material are taken from the local people, and sometimes we specifically send our suppliers to set up the plant there and give us raw material. So there's a mix and match of taking our legacy and and making a new thing in a project.
Okay, sir. Thank you, sir. And my next question is, looking ahead, which single capability, engineering depth, execution speed, technology adoption, or client relationship will differentiate Globe Civil from peers?
We are in constant approaches to constantly change with the new things. And the aluminum formwork came, we were one of the few people to do aluminum formwork. When EPC came, we were one of the few starting people to take EPC projects. So that's a constant change and do it. So we adopt all the new things that is available and change ourselves and mold ourselves. So like aluminum formwork, only few people are doing it right now, and slowly, as the government has already mandated that all residential projects will be in aluminum formwork, so it will be replicated around, it's already been replicated around the country. It will be more. So we are in constant change and constant opportunity to see new things and do new. Now, sports infrastructure, we are the few small companies to step into small infrastructure. We got a stadium project of 222 crore because we see like in coming, there will be a lot of sports infrastructure projects around the country with stadiums and all around sports. The infrastructure is much required in the country. So yeah, we keep on adding new sector and new segment and new machineries and new thinking in our projects.
Okay, sir. And with the order book expanding, how are you ensuring that site level execution quality remains consistent across all the regions?
We have a particular method of quality control which we adopt at all projects, and we don't compromise on that. We have a third-party safety agency which we deploy on all our projects so that the safety and quality is not compromised. So that has to be a priority, and we make it sure that these things are maintained. Otherwise, there's no point in expanding if we are not able to maintain the quality and the safety part.
And with the increase in the order book, if you can see, we are bidding for a bigger project. So number of the projects is still the same. We are not increasing the
size of the project.
We are increasing the size of the project. So our focus We have ample team to maintain that quality, and we are looking for bigger projects.
Okay, sir. And sir, are you seeing any early signs of project delays either from client side approvals or on ground constraints that we should factor into our expectations?
Right now, with current order book, we don't see any major delay in projects or major from the client side or from our side. All are running smoothly. All are central government project and all focus are there to complete the project on time.
And escalation is also there in most of the projects.
Okay, sir. And what are the main client feedback themes you have been hearing recently, and how are those shaping your approach to execution or bidding?
The main clients are CPWD, TCIL, NBCC. These are the main clients, and there are projects coming up in these companies. So we focus to remain these companies and as well as add more PSU which have good central government project.
We are already having 3 to 4 NBCC projects, and we have bidded another NBCC project. So ample works are coming. Every day you can bid any tender. Every day you can bid a tender. It is about the choosing and
due diligence.
Okay. And sir, at the project size scale up, how comfortable are you with your current project management systems? Do they still have room to handle more complications?
Every time there is a room to add projects, and of course we are a growing company and we are focusing on our execution to make it streamlined. And I think we still have the room to grow more and have more capability of execution, including bigger projects.
Okay, sir. Thank you, sir. Thank you for answering all the questions, and all the best, sir.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Ms. Chandni for closing comments.
On behalf of Globe Civil Projects and Equibridge Advisors, I thank everyone for taking the time out and joining today's earnings call. If you have any queries, you can connect to us at info@equibridgex.com. Once again, thank you for joining the conference. Thank you, sir.
Thank you.
Thank you.
Thank you, everyone. Thank you.
Thank you.
Thank you. On behalf of Equibridge, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.